Hi, everyone. I'm DeFi Dad. You are watching episode 18 of Yield TV. All right. So we are here today. It's Monday, October 19th. And it was a big weekend in DeFi because BarnBridge has officially launched. So I've got with me Tyler, are you the sole founder or co-founder of BarnBridge?
I'm the co-founder. I came up with the initial concept and wrote the framework for the white paper in April of 2019. So I mean, it's I would say it's my idea, but I'm a co-founder. The way it's structured as a DAO is, I don't have any more voting rights than anybody else. And as far as execution, I couldn't have done it without my team. So I'm not the founder. I'm just one of the people.
I think of you as having many friends. I couldn't imagine you working on your own. So this makes sense. Everyone, BarnBridge, it's a protocol that tokenizes risk. We're going to talk about how you can split that risk so you can buy in or sell out of risk. And yeah, just Tyler, congrats on your guys' launch. And I guess maybe we could start out today with talking a bit about what does that mean in layman's terms, what I just said, the fact that you tokenize risk. What is BarnBridge meant to do?
Yeah, so I would say that what BarnBridge is not the easiest thing to explain quickly, so I'll try my best. It's very similar to if someone tried to explain you the difference between an automated market maker and a club, people don't know. Even people who use Uniswap don't know the difference between what that is. So BarnBridge will be simplified through UI and UX, when you actually log into the platform and use it, what that looks like. So I'll explain that in a second, but the easiest way to think about it is that there's two risks that affect the underlying price of an asset. Either what we learned in finance school is it's the current price is the future value of cash flows. So yield in crypto, right? The yield coming in, if that fluctuates, that can change the underlying price of an asset, right? And so you can essentially structure that yield into streams and then essentially sell off various parts of it in terms of how that is represented. So if interest rates go up, you have a tranche that represents that and you make money if it goes up. If you expect it to go down, then you want a fixed tranche that essentially guarantees the amount of money that you're going to make, very similar to why you want a fixed rate mortgage and not a variable mortgage, because you don't want your mortgage rate going up to 19% in a crisis. So there isn't legitimate fixed interest in crypto. That's something we're working on for our smart yield product, but that's only one aspect of how prices fluctuate, especially in crypto. One thing that I was thinking about last year when I came up with this concept and wrote the white paper is that in crypto, there's an underlying price that doesn't have anything to do with the future value of cash flows, because Bitcoin doesn't have a cash flow, ETH doesn't have a cash flow yet. It's not a productive asset. So you can essentially take an Ethereum, put it into a smart contract. We'll use $100 as the price of Ethereum just to keep the math simple. If it goes to $110, that means you have $10 of positive alpha. If it goes to $90, that means you have negative $10 of alpha, right? But what I realize is that not every dollar of Ethereum deserves the same risk in return. What you can do is you can put that Ethereum into a smart contract and you can essentially split it out into two $50 buckets that are proof of liquidity or proof of liquidity of that $100. So if ETH goes to 110, then you can make $7 of it go to the high risk tranche and $3 of it go to the low risk tranche. If it goes down, the high risk tranche loses $7, the low risk tranche loses $3. So you can essentially create a product that now has low risk ETH and high risk ETH as an entry point, which will allow TradFi to come into the market, because one of the reasons they're scared to move into crypto is that they want access to digital assets in their portfolio, but they don't want to take on the risk. as well as their clients. And the other piece of that that's so powerful is if you think about something like synthetics with tokenized equities, we can also start to create low risk entry points into Apple, Tesla, oil, gold. And it allows you to move in and out of risk in a way that wasn't possible before smart contracts existed. So like this is an example of DeFi that can't work in TradFi, which is extremely powerful.
Tyler, can you think of a time this summer before BarnBridge launched where you wish BarnBridge had already launched, where we would have all benefited from having access to what you all are working on?
Yeah. I mean, so I personally, the way this started was I emailed Kane from Synthetics actually to just steal the idea or build it himself. And so I had made a good chunk of money off of Synthetics, which, you know, that helped to farm BarnBridge. And I could tell that DeFi was getting a little frothy just in terms of hype. I mean, I think long term it's going to continue to go up, but I didn't want to like sell my SNX or sell my link. So I personally just wanted a way that I could move into a lower risk point and sit in it. So like if it did blow up to, you know, $1 trillion because people realize the value of DeFi, I'm not like sitting on my hands and die. So I wanted the price upside. I just didn't want to be sitting in the full risk curve myself. And that's when I emailed Kane because I wanted to de-risk some of my DeFi without having to completely move out of it. And sometimes I want to risk on and I want to take on more risk. And I can't because, well, I can. I mean, you can leverage on Aave and go like put something down and then borrow. But there's not a way that I can just buy into an asset that would give me a higher upside with one transaction like that. So, I mean, I would use it on both ends of the spectrum.
Yeah. I love Kane was tweeting, I think it was just today or yesterday, about like how you reached out to him. And I think it's always proof that like everyone in the space is very accessible and it's helpful just to ask for help or to ask for feedback. You know, in your case, it's come back to help you by launching, you know, BarnBridge. But worst case scenario, someone just says, you know, buzz off. So I've pulled up the BarnBridge website here. I'm actually going to click over to the application. Can you talk to us, Tyler, about what exactly what has been launched over the last 24 hours? Because people were, well, let me go ahead and get us to that screen actually. So I'll share.
You just click launch app.
Yep. Here we go. Okay, so here's the app. A few days ago, you all made it possible to deposit USDC DAI and synthetic USD. And so you've got 167 million deposited. And then you have a Uniswap pool with the bond governance token. And so if they provide liquidity, they can earn bond there as well. Can you talk us through what's the point of all of this? Like, how will this empower and enable the BarnBridge protocol to be successful?
Yep. So the way that the entire point of what's going on right now is to distribute the token, like where you have like Bitcoin, where there's like proof of work and mining in order to distribute it. Like Ethereum is trying to move to proof of stake. But the initial distribution of Ethereum was an ICO. Bitcoin's was like you needed to mine it. We're essentially using a proof of capital mechanism and trying to distribute the token to as many people as possible, as quickly as possible, because 68% of the tokens are going to the community, and then 10% is going to the treasury of the actual DAO. So essentially, what's existing right now is there's $167 million going after like the first distribution of bond tokens. The Uniswap pool is to incentivize liquidity. So essentially at the point that there is price discovery and like people have bond in their wallet, which they don't right now, they can actually go on and essentially create a liquid pool so that, you know, people don't get stuck and can't move their bond tokens.
Yeah. The Uniswap pool makes complete sense to me, that if bond is going to be a token of utility, in this case, governance. You need that liquidity, so you reward folks for providing that liquidity. I'm curious, what will USDC DAI and synthetic USD be used for, other than earning the bond token right now?
So the reason that we picked those tokens is because when the actual protocol launches for Smart Yield, stable coins are normally the higher like yielding assets. So like the first risks that we're going to be tranching in the industry for yield returns, like we'll integrate with like Aave, Compound, and pull yield in from the ecosystem. And that will most likely be denominated in those 3 stable coins. So the yield farming goes up until we actually launch the real product. And so having people in those tokens that are going to be the like first primitives on the platform, they're not going to have to like go move a whole bunch of things around. So it's just kind of priming the industry to have those available to become liquidity providers of the actual product.
And what will be, I know I've got to let you go here in a minute, but what will be the next update that we can look forward to? Like right now, I could go in and deposit any one of those stable coins once I earn bond, unless you, actually, if you go to Zapper.fi/invest, I'll have to double check if we have.
No, shout out to y'all. You listed us within like an hour. I was really impressed.
Yeah, so we do have support for anyone staking in BarnBridge. You can see it on your dashboard, and then I'm sure we'll get a zap up soon for this bond pool. But what would be the next update, Tyler? Is there anything that you can tell us that's already on the roadmap?
Yeah, it's going to be price discovery. I mean, like I have a feeling that the next couple of weeks are going to be a little bit crazy. I mean, with this much money, I think like originally, who knows what the price will be at, but that, you know, if there's high APY, then people are going to be clamoring for bond. If there's super low APY, the price might drop and then people leave the pool. So that's going to normalize as we build towards, we have to launch the actual DAO and the Smart Yield product. And we're already, I mean, we've been building that because this code's been done for like three or 4 weeks, but it's going to be price discovery, probably like a month or 2 of that. And then the actual product's going to go live.
Very cool. Very cool. Well, hey, thanks so much for your time. I mean, this was great just to kind of briefly talk about BarnBridge. We'd love to have you back too. Like I would love to learn more about BarnBridge. There's like a lot in terms of the strategy about how to use this. And then we can actually screen share more the next time. But I think for right now, I think we kind of covered all the core utility that folks can benefit from. And just as a reminder, everyone, you can learn more at BarnBridge.com. And yeah, Tyler, please extend my congrats to the rest of the team and keep on building, dude.
Awesome. Thank you so much. We'll talk soon.
Awesome, dude. Thanks so much. I'm going to bring so we'll bring on Kendria. Kendrea Camacho, welcome to Yield TV.
Good morning, DeFi Dad. How are you?
Great. Yeah, great to finally bring you on. So some of the background to Kendria is, so she's a DeFi super user. I've known her for about 6 months. I only got to know you just because she has a lot of really good ideas. She tries all the DeFi apps that I can think of. And then we talked one time more and I was like, you try more things than anyone I've ever spoken with, other than myself. Like I was like, you're actually like just trying things for the sake of it and putting like real skin in the game. So anyways, we're going to talk more today about the psychology of what goes into her decision-making, essentially like, why are you trying so much in DeFi and like, how can we get more people to participate? But Kendria, can we start with your background? You worked at Gartner for a bit. Can you talk to us more about like that background working in investor relations?
Sure. So I worked for, as you said, Gartner Group, which is a research and advisory company. It's in tech. And so I was really kind of entrenched in the finance world, tech, emerging technology. So I had that background. And walking into cryptocurrency, really, we had joked about this. It was kind of by mistake. I came in on the big boom in 2017, and so
We all did.
That's when everyone came in, right? So Bitcoin was like the next like $1 million coin, and you know, you were like FOMO in, like, oh God, I got to have some of this, you know. But the story is that I remember when Bitcoin was very early in its stage, and a coworker walked in and said, "Hey, have you guys ever heard about this thing called Bitcoin?" And you know, I'm sitting there, and we're all like, you know, chewing the fat, and I'm like, what Bitcoin? Like, what is that? He's like, it's like computer money. And so I like was just like, dude, what are you kidding me? Internet money. I'm like, go ahead and lose your whole shirt on that. And those words came back to haunt me big time in 2017, because I think Mike was getting in at like 30 cents, you know, and and it's been years since I've connected with him. So I hope he really did buy the Bitcoin. I totally didn't. He doesn't hate me to this day because
I gotta be doing well. What year was that again that you first learned about?
That was when I first discovered it. Was 2008. 2009, it was really early. I mean, he would have been mining it himself. Never when you meet a new technology, never ridicule it, investigate it.
Yeah. Well, let's fast forward to I think it's 2019 when you start to get into DeFi more, right? Talk to us about like what was the first application you used? Do you remember like how you started to sort of connect the dots and use DeFi more regularly?
Absolutely. So 2017 was my awakening to the whole cryptocurrency. And really, it started with Coinbase. Shout out to Coinbase, because it was really easy. It was just, you know, it was very intuitive. I could move my fiat or my dollars. And, you know, Bitcoin was the first thing that I learned about, but I stayed for Ethereum. When I first purchased Bitcoin, now you have a piece of the pie, right? So now you want to start doing research about what this is that I just bought, instead of buying into the hype cycle that was going on at the time. And then I saw off to the side Ethereum, and that's when my mind was really blown, because Bitcoin was more like a store of value, right? Like there's only 21 million. So you're like, having a little bit of that would be great. But Ethereum kind of exploded my mind on what it could be, the supercomputer, a world computer, the versatility of it, the utility of it. It was just amazing. And so really, again, going back to Coinbase, I bought my first piece of Ethereum during Coinbase as well. And the price of entry was what was amazing. $5, you could own a piece of it, right? So that was very attractive to me. In the stock market, you know, you've got your penny stocks, you've got your low paying stocks or low buying stocks. But this was something that was just so I could take what I would take to Chick-fil-A and own a piece of something. And then owning it makes it, for me, it made me responsible for it, right? So now I had to know everything about it. And so as we were talking earlier, so Bitcoin was my door opening to Alice in Wonderland. Ethereum made me go down the rabbit hole.
Do you recall then, so your let's say dollar cost averaging into crypto, what's the first DeFi application where you have to, you know, self-custody your funds and, you know, use something like a MetaMask? What's the first app that you tried?
My first app in MetaMask was Instadap, actually.
Oh, that's right. I remember you talking to me about
it. It was Instadap. That was it. And so for me, I'm definitely a 0 and 1 on and off type of girl. So Instadap, for someone else may think, wow, that was a big jump. But I was just like, you know, go big or go home. And at the time, when I really fell in love with Ethereum, I was trying to figure out how to get more of it without blowing my household budget and having to tell my husband.
Yeah, exactly.
So I would attribute a friend of mine, his name is Amir, showed me a way to open up a CDP and to be able to leverage the Ethereum that I was able to accumulate at that time and leverage it in order to be able to get more. And so again, I'm a risk taker, but I'm not a high risk taker. So I knew that if I stayed within certain margins, that I wouldn't have to worry about losing my initial buy-in, and that I'm a hodler by nature. So I knew that I would be in this long term. So me having to lock it up for a while in order for me to take advantage of the kind of the ebbs and flows of the market was okay with me. And then from Instadap, Oh gosh, I think I went everywhere at that point, because then it's just like the more you know, the more you want to know. So, I was either on Etherscan looking up stuff. I was on, at the time, we all still love CoinMarketCap.
Yeah.
Right. So I just started doing a bunch of research, and then I started to find that there was a small community too that was on Facebook, and it was all centered around cryptocurrency or fintech being a way to eradicate economic disparity in my community, in the Black community. And so really that kind of, at that point, that was a cement for me. And I started learning more the more that I interacted with this group, and the more research that I get, because I was already, by nature, I'm an analyst, a researcher. So the more that I was doing, I was just like craving, wanting to know more, wanting to experience more apps, more dApps, and just really find out about this whole community about the cryptocurrency. It was like being on the frontier, right? So most of us missed Al Gore's internet, right? So, all of a sudden here comes this amazing opportunity to get in on a technology that I could see. I could see this being something that will be just a mainstay for my 7-year-old son. And now to be able to be on the bottom floor of that, be a part of it, and help it grow, because that's ultimately what I'd like to do, especially in my community. It's an amazing opportunity, and it's growing every day. And that's the sure sign of a healthy ecosystem, is that even in its volatility, you're still seeing that technology being pervasive and still proceeding and moving forward. And that's very exciting.
Kendria, what principles in legacy finance do you recognize in DeFi? Because some more background on you that folks should understand to really understand your journey in DeFi is, you won't say it, but I'll say it. You are a sophisticated investor. You talked to me about lots of different products that you've bought in legacy finance, different derivatives. And so anyways, I'm curious, from a more macro level, we could talk about time horizon is definitely more forgiving to you if it's a longer time frame that you invest in. But what else do you recognize in legacy finance that you've taken part in that also are principles to follow in DeFi?
Sure. I really, everything, it booms and busts.
Yeah.
So, right. So you have maybe in traditional stocks, you have finance. All of a sudden, fintech is up, energy is down. Then you could have consumables that be up. So I really was able to kind of take that into such a volatile space that crypto is right now. I imagine that the volatility at some point we will find a stasis, but that's what kept me in it, that I understood that we could go to, a $1,500 Ethereum and then go all the way down to, $85 in March, and so that none of that scared me, because I understand, again, it goes back to technology, right? So let's take traditional. You've got Coca-Cola right now, which everyone drinks some form of Coke, right? You've got Sprite, you've got all of these, and the stock price is very depressed right now. But I understand that no one's going to stop drinking Coke. So for me, that's a stock that I always will want to acquire. One, it also pays dividends, but it's something that I know has a use case, right? Yep. So when I look at cryptocurrency, and this is how, to your point, this is how I evaluate a project is, what's its use case? Do I see this being a mainstay once it goes mass adoption? Is this something that someone's always going to use? And that's me being now also more refined in the space, because when you first start, you're just looking for that home run token, that's going to get you the Lambo or the new house, or, the trip to Bali. But I quickly understood, again, taking traditional into this space, is that I need to find something that I know is going to last forever, because technology is always going to be growing. That horizon is getting longer and longer down the road. So that's where I was able, kind of just from a finance standpoint and a dollar cost averaging, about taking money out of, savings, or taking money out of our budget and now investing it into a highly volatile market right now, is that I see the future.
Kendria, can you talk to me more about some of those use cases that you mentioned could blow up? what in DeFi is exciting to you right now? What's, if you can think of like one or two that are top of mind?
Right now, and I won't go into a lot of it because I'm still trying to understand the corner of it, but NXM or Nexus Mutual, for me, that's another, I do believe is going to be a trending, really, really trending part of this technology is insurance, right? Again, we go back to risk. Now, as a woman, I embrace risk, but I like to kind of hedge it. And
Yeah.
so NXM speaks to me because it's insurance at its core, at its like very common level, it's insurance against smart contract risk, right? Yeah. So for me, that's really exciting because I think that as more people are coming into the market, they want to find a way to shore themselves up, at least a little bit. And so I do think that insurance is the next horizon. The other thing for me right now is the same hot spot and topic for everyone else on crypto Twitter is the NFTs. So I got into that really early with known origin. And for me, it wasn't necessarily trying to find the next investment piece. I just wanted to start looking at art that I thought was really cool on a non-fungible that, a one of one, it's mine. I own a piece of art, you know what I mean? And that was very cool is that, again, I do see it's blowing up now, right? So I saw that very early on. So I just started dabbling in that thinking like, how cool is this? Like I could leave this piece of art to my kid, and that's his forever.
That's really cool. What have you used to gain exposure to NFT art? Like, have you bought individual pieces, or would you hold something like I think of the Rari token for Rarible? If you don't mind disclosing, like what you.
No, it's fine. So I'm not a baller. Or I'm a baller on a budget, right? So for me, it really is the love of art. So I'm not looking for the next, who's going to blow up in the industry, super rare or known origin. I'll look at a piece, and if it speaks to me, and if the ETH is right, and I've got a little to play with, I'll purchase it. Known origin on the NFT space was probably the first that I interacted with. Then there's super rare, and so. Those were where I walked into. I totally missed the whole meme thing, which I can kick myself with, right? But Rary also is also right.
You can still participate, but yeah, I wish I was in that original airdrop.
So, it's just really, it's about finding a connection in the real world for what interests you into the world of crypto technology or cryptocurrency for me. And as soon as I find a project that aligns to who I am at my core, then that's where I go out and I start to accumulate and acquire.
Very interesting. And by the way, I want to make sure we get you off on time. Like we probably got like 10 minutes at most here. So kind of digging more into the psychology of how you decide to use which DeFi applications. Can you talk to us about that decision process? Like maybe you could tell us what qualifies to gain your interest versus if there's any red flags that you would just avoid. And again, this isn't financial advice, but we're just talking strictly about your process, because I think you're maybe one of 100 people I'll probably ever talk to that's tried so much in DeFi.
For me, it has to be really based around the UI, the user interface. For me, it has to be intuitive. I've kind of, now that I've been in this space for a while, I'm able to kind of like delve into deeper things like, like Polkadot and having to establish some other things that the UI basically isn't there right now. But initially it had to make sense to me when I jumped on someone like we talked about CFI with Coinbase, and basically $5 in a dream could get you bought in to the to Bitcoin and to Ethereum. But then I look at something right now which is strictly DeFi, which is Argent. The wallet it's beautiful in design. As far as how easy it is to take fiat currency and be able to bring that over and start buying stable coins like a DAI, a USDC, a USDC, also, even with Ethereum and Coinbase. So for me, I have to look at whether the interface makes sense to me and whether I can unwind it or get out of it quickly or get into it quickly. And so the more where I see this going as far as mass adoption is that if a developer can make this to the common, Jane, to someone like me, then it will make it easier to onboard, your husband or your wife or your cousin, your mom, your dad. It has to make sense. So we do have to take, in my opinion, a lot of what traditionally we've seen in finance, and it has to be similar in this new world so that people can kind of make that bridge and be like, okay, this isn't so bad. We get caught up, and not to say that research is very important, but I think when you say white paper, people automatically, their eyes roll in the back of their head and they think they have to be a finance geek, versus if you talk about like I said, a Coca-Cola or a Philip Morris or, Microsoft, these stocks are already entrenched in your head, even if you're not in the market, because they're household names in, your computer, what you're drinking, what your McDonald's. So you already have somewhat of a comfort level because you already are intimate with them in some way, whether it's on media or using them. So I think we have to learn in the community, have to bridge that gap and bring traditional into this new sector so that people aren't scared of it. Because most people that I talk to about this who have no knowledge are so scared because it seems so very ethereal. It seems so very big to their understanding until you say, no, download this app, like Argent, download this app, connect your debit card. And here are a couple of things that I would suggest. And I always suggest using the basics. Do get a piece of Bitcoin, get some Ethereum, get a couple of stable coins, right? So for DAI, it's a 1-to-1. So you understand what a dollar is, you can understand what DAI is, and then just start playing with it.
That makes sense. Yeah, I tend to think of dollar cost averaging. I've talked a lot about that with you. Savings rates, which is why like the DAI savings rate, I think has been at 0 for quite a while now.
Right. We try, yes.
That's such a huge opportunity if that can go back up, just because it's so easy to understand that you're saving. And for those that are newer to the space, they can get it. One thing you made me think about though is synthetics. So synthetics, many people don't realize synthetics is all about on-chain exposure to anything, whether it's gold, oil, an index like the Nikkei 225. But their goal is to provide equity exposure eventually. So, I mean, based on what you were sharing, like those household brand names, like, can you imagine if you could buy like Coca-Cola, a synth of Coca-Cola? I mean, that's huge. That's something to get really excited about.
XNX is an amazing project, and as actually that you're saying this, I had an opportunity to jump on to their L2 version, layer 2 version of it, which is really fast.
Yeah,
and it's awesome. So again, that's another one where I feel really privileged. I wish that I had the money to and say that I had the wherewithal that when I bought in, I should have bought I should have asked my husband to tap into the 401k, but I didn't. So.
We've all driven our spouses nuts.
But it's amazing, and I totally see the opportunity in that. And again, that will draw the traditional, financial people who are in that. It'll draw that in because they'll see the correlation between the two. It's really exciting. So SNX is just. Kane, shout out. Would love to meet you one day.
Yeah. You're a super user of synthetics as well, amongst all these other platforms. Kendria, I have one more question for you with like less than 5 minutes left. I wanted to know, like, while we're talking about like all of the empowerment through DeFi, and obviously we both participate in all these like new applications, we think it's the future. At the same time, do you think it's necessary for a newbie to crypto to try DeFi, or is that journey still going to happen through centralized finance right now? Like, do you have to start with like a Coinbase and dollar cost average into something like Ether or Bitcoin, or do you think there's a path there with DeFi that's just as user friendly?
Absolutely, I see, because of the the new dApps that are coming, I mean, like we're regularly at this point, something's being rolled out into production. Right. So I do think that there could be a good bridge just from not even to walk through the door of CeFi like I had to, but actually come into DeFi. So you've got something again like Argent or even Dharma, which are again at its core is download this from the App Store. You know what I mean? Link your card up. And you're off to the races. And again, too, we didn't even talk about Cash App. So Cash App, with Bitcoin is, again, it's a way that it's becoming now more familiar for people to be like, oh, okay, so I've got some money in my Cash App. I'll just go in and buy some Bitcoin that everyone's talking about. But I do think we're at a stage right now that if we can get more attention onto this space and we can get more people talking about it, that there could be definitely just a jump into DeFi and not have to walk around the CeFi. At its core, for me, what DeFi means is freedom. I don't have to go through a third party. It belongs to me, therefore it's my responsibility. But again, I can self-bank myself. I'm on at its best the anonymity, right? It's just, their numbers in a contract, it's a wallet number. They know nothing about me. And again, and I know we have very, very few moments left together, but just as a Black woman, I honestly see that the bridge right now for Black people to be able to come in on, again, a frontiering and being pioneers and something that has nothing to do with color. It has nothing to do with socioeconomic status. It's if you're willing to kind of go into this unknown, test this technology and be able to stay here. All you're smart. It's one smart contract talking to a wallet, or, you're as good as the money that you have to, come in with, and you can do that with dollar cost averaging. So instead of no one's going to the movies anyway. So instead of, so taking that excess cash that we all have and just putting it into it, it means a lifetime of legacy for yourself and for your kids. That's how I see it for myself.
That's a really interesting point. I think though, one of the missing connectors to the DeFi space is education, right? Like yes, a smart contract doesn't discriminate, but having internet access does. That's something if you are in a poverty cycle, absolutely, like there's no way to gain access to that. And even like what we were talking about with like savings and savings comes back to like your wage and so much more. I think, like, have you thought about it all, like how we can be better to educate more people, including the Black community, so that we don't look back and say, oh my gosh, like we screwed up again. Like there's a very small group of people in the world that knew about this and have gained access to it. We want everyone to, regardless of gender, race, whatever nation they live in.
Certainly. Well, I'll have to say, DeFi Dad, people like you right now and with your videos and education is paramount to this. If not, it's just gambling. If you don't know what you're getting into and if you don't understand the principles of it, you're really just trying to put a coin in and hit the slot and hope that you hit big. And so financial literacy is really a big part of who I am and just understanding this. So your videos, I think, are really great. Seeing more faces of color, to be quite honest. So, right now, our industry is awesome. And everyone has been super friendly. Whenever I've DM'd someone and asked the question, everyone's been willing. But again, you're still seeing the majority of white guys in ties or, tie-dye T-shirts, I should say.
Or backwards hats.
Or backwards hat. So they're just, for me, there has to be a little bit more representation. So I think I might be challenging myself on air with you right now.
No, you're fine. I was going to say I can stay on as long as needed, but I want to make sure that you're not late for your next meeting. You cut me off when you're ready. I could hang here another hour with you. I'd probably stay a few hours. So
thank you. But it's a challenge to answer the call to educate. And really, I think once the education, it really becomes the core of this, then more people, the access to it, as you were saying, there has to be an access to at least understand. And I think in traditional finance for for communities of color, that's where there might be a missing link because the financial literacy and education has not historically been there. So I would love to see our industry be the antithesis of that, right? So we're the exact opposite. For us, the entry is your education. And then it leads to opportunity, and it leads to, eventually, hopefully it will lead to the Lambos. If not for me, maybe for my son, but I hope to taste a little bit.
Yeah. I definitely would encourage everyone to check out, you called out like what's, I think, a bridge to DeFi and crypto. It's the Square Cash App. It's not a DeFi app. They are in custody of your assets. At the end of the day, you are dependent and trusting that Square will, work with you in good faith. Like, in other words, they can seize your assets. It's not like Argent, but I think the concept is there of gaining exposure to crypto, and that's interesting. And all that needs to happen is, it's a fiat on-ramp actually when you use the Cash App. If we can get to the point where someone can truly be in control of their funds, but also want to be in control of their funds, that's a whole nother question. Right. Do you want control of your funds? Do you want to be your own bank? Because it can actually end in disaster if you lose your private.
Absolutely.
So, but yeah, anyways, check out the Square Cash App. I haven't talked about it in a long time, but you definitely made me remember like what a great bridge it is.
It can be, and it's just, I would just say, just try it. Again, dollar cost averaging, disposable money. It's just the way, it's the entry in. So for me, there's no barrier, right? Because you can be in it for as little as, say, $5. And that's the point, is just to be able to experience it. This technology is not going to be for everyone. This industry is not going to be for everyone. But do you want to sit back one day and be like, I could have, should have, would have? You know what I mean? Or do you want to at least get in there and say, okay, well, at least I own a little bit of a piece, and hopefully that'll spark something in you to want to know more. And quite honestly, if you want to know more, then, the Alice in Wonderland, the rabbit hole is there for you. And it's just an amazing time in history to be in the space.
Absolutely. Well, we would love to have you back. I feel like I could, again, learn for hours from you on all these topics. And I know you've got another meeting coming up here, so I want to make sure I let you off.
Thank you.
Kendria, anything else you want to leave folks with? I put down in the whatever the broadcast subtitles here just to follow you at Kendrea Camacho on Twitter. You're obviously very friendly and helpful to answer questions. And like I said, we just would love to have you back because I think there's a lot more we could learn from you.
My parting words is make sure, if you're not, follow DeFi Dad, and just be hungry but learn, because again, if you don't learn, then it's gambling. And so, that's only good for a while. But the people who stay here and can ride out this volatility is because we believe where the space is going to go. Be a part of it.
Absolutely. Well, I am going to play our little Yield TV video to end the broadcast, but we'll be back, I think, on Wednesday with Arthur Chung, I think is how I pronounce his name. It's Arthur 0x. So we'll be doing an interview with like a pretty big DeFi investor and kind of getting like his theses on the market. But otherwise, thanks so much, Kendria. And thanks everyone for watching. Make sure you subscribe at tv.zapper.fi, and we'll see you Wednesday.